Peace, love, knowledge, and freedom, and welcome to Mastering the Market, Right versus Right Now. So this webinar is this webinar was set up because I got a question about a particular stock. Someone asked me a question about the stock and wanted to know if it was a good idea to get into. I told them I had to look at it and things like that. So the question that came about was is it a good entry? Is it a good stock to invest in because it was cheap, right? So as I analyzed the stock or whatnot, I realized that it was cheap, but it wasn't low. So the price would have to come down a little bit more for you to get in and have a good price and get some good profit out of it. So it got me wondering. Well, not really wondering. It got me in a position to go over what that actually looks like, because a lot of times, especially in with the stock market and with people, kind of hopping in prematurely, they can get an entry that is not good. And just because it's cheap doesn't mean it's low. And at the same time, just because it's expensive doesn't mean it's high. You know what I'm saying? So I wanted to give a little bit of the insight that goes into that, so people can make better decisions with their investing, of course, and with trading. But today, the vein I'm going to stick in is solely for stocks. I'm not really going to look more towards the Forex market today, because typically that's the market that I go with. But it needs to be seen on the stock market because it has to go, for a longer period of time. Okay. So the first thing I'm going to do is I'm going to explain the difference between cheap and low and expensive and high. Okay. So when we look at cheap stocks, right, because a lot of people say things like, well, I got into, let's say, I'm exaggerating at this point, but I got into Microsoft back in the 80s when it was only $1, right? That was cheap, especially if we consider comparing it to now. Very cheap, right? But it was also low, because what you have to realize is that there's a rise and fall of every market. So even if something is cheap, it can still be a high price for that, because you have highs and lows within the market that occur. So whenever you're buying anything, you always want to get the best price. It's just that simple, And then on the other hand of that, you can get somebody who has a current stock, say at like $100 and something, right? And that is very expensive. That is expensive. However, that the high for that particular time, let's say it is $100, right? But their previous high was 220. Okay, so that is actually, that $100 is a low. So you can prepare to anticipate that I can enter this expensive price and go up for an even more expensive price, because it's going to be higher because I'm at a lower price. Okay, so when it comes to understanding that is one of the quintessential pieces to investing and saving your money and making as much money as possible, simply because you have to be able to pay attention to the markets. Now, the most important piece to that are time frames. Okay. And you have to understand time frames, any time frame that you're looking at, to truly understand where the market is going. And I'm, right now I'm just, talking a little bit, but I'm going to get heavy into that. I'm going to show exactly on what I'm talking about on the charts, because the time frames can vary. And depending on what time frame you're on will determine what type of money is being moved on that. You know what I'm saying? So you can be on a 5-minute time frame, and your particular stock that you're looking at could say enter now, right? But you can be on, say, like the daily time frame, and it says get out. Which one are you going to go with? And that's when it comes into understanding bigger time frames mean larger players, because the bigger the time frame, the larger the player. The larger player, the more the money. That's who you want to move with. If the large money says, yo, stop selling, stop buying it, we're selling it, you stop buying it, and you rock with them until they get ready to buy again. Okay. Learn how to anticipate and move according to how the larger players are moving, because that's where the money is. That's where your banks are moving, your hedge funds, corporations, different economies. That's where they're moving at. That's who's controlling that. Okay. So if you're going to stay on the 5-minute time frame, and that's what you're looking at to do your investing, cool, stay there. However, if you're going to do long term, I highly recommend using a higher time frame, from 4 hours, 4 hours daily, monthly and weekly, monthly, and up. Those are the time frames you want to actually look for when you're getting ready to invest, because it has a longer time frame that you have to sit into it, but everything is still going to move the same way. Okay. So what I'm going to show is that you have, when I'm about to go ahead and take it to the chart so we can go over some in-depth examples, right? And I'm going to show a cheap stock that is also low currently. I'm going to show a cheap stock that is actually high right now. I'm going to show an expensive stock that is a low price, and I'm going to show expensive stock that is at a high price. Okay, so you can get examples of these four particular phases so you can have a better example. Now, here's my financial disclaimer. I am not providing financial advice. These are solely for educational purposes only and for the examples that are being used. I am not encouraging or recommending anybody to invest in any of the stocks that I show. I'm solely giving them examples, showing you the different time frames, how the different money moves, and how to determine the difference between a cheap price and a low price, and the difference between an expensive price and a high price, and how to move accordingly to know what's good for you and what's bad for you. All right. So before I even show that, let me explain. Okay. A good buy, if you're in the stock market, all you can do is buy, and you can sell at higher prices. Of course, you buy low, sell high, but a good buy has a low price. Doesn't necessarily mean that it's cheap, but it has a lower price. So it's cheaper than it previous was, but your focus is to have a low price. Don't get so wrapped up on if it's actually cheap, because being cheap can still drop dramatically. You see what I'm saying? You can have something that's relatively cheap. It could be $7, but that $7 could be a high, and its previous low may have been like $4.30. You would want to get as close to $4.30 with the anticipation that you're going to go back up to $7. Okay. So keep that in mind. A good price, a good buy in the stock market has a low price. Okay. A good sell in the stock market has a high price. A bad buy has a cheap price, but no low price. Okay. A bad sell has a expensive price, but no high price. You see what I'm saying? So you never want to get caught up in missing that. You always want to make sure you put those two together. All right. Well, those four things together, two things together, according to those four things. All right. So without further ado, I'm gonna go ahead and move on into the charts exactly, because I'm going to show you in real time these fluctuations and these movements. Okay. So you can see what's happening and what would be a good price. Okay. So give me 1 second so I can share my screen. All right, good. Here we go. All right. So first thing that I'm going to show is I'm going to show GE, which is General Electric Company, right? Again, this is not a recommendation to get into this investment. Okay. I'm solely showing this as an example. So with General Electric on the 5-minute chart, let me show you. So here you can go down to, if you're using, I use TradingView to view and analyze my charts, but you can use TradingView. You can see the different time frames. You have 1 minute, 3 minute, 5 minute, all the way up to 4 hours. You can even go as high as monthly, weekly, and daily. Okay. But for this particular example, I'm using the 5 minutes. Okay. Now, so with General Electric, this is an example of a cheap stock at a low price. Okay. And this one is pretty self-explanatory. You can see that you have the high right here. Okay. It's come down as low as here. And this is where it's currently sitting at. Okay. So this example would be what you would look for if you were looking for a low price. Okay. In addition to it being cheap. So right now it's at $6.27. Okay. And its high was at $6.55. Its low is at $6.21. Okay. So it came down. This is what you would consider a low price. And it's also a cheap price. Okay. So these two things are going to go hand in hand. So whenever you're looking for that, this is what you want to pay attention to on your charts. Okay. But like I said, different charts have different money. Okay. So where you're seeing this on the 5-minute chart saying that it is at a low price, you still want to do a higher analysis to make sure that it is really low. Okay. So if you went up higher, you will have more confirmation. And not only is it that it's cheap, This we went from the 5-minute to the 4-hour. Not only is it a cheap price, well, a cheap price, as you see here, it is also a low price relative to its highest point. Okay. So this would be something that if you were to get into it, you can ride this up, take it up for a decent amount of time, and you would anticipate that it can at least get you back up to this area here. Right. But again, this is not financial advice. This is not to say invest in this. By the time you see this webinar, the data is already gone. OK, so you'll probably be too late. All right. And if you're rewatching this on a replay, you're definitely too late. All right. So that is an example of a cheap price and a low price together. OK, so keep that in mind. You can have cheap prices and you can have low prices. All right. So now we're going to move into a cheap price that is also high. OK. And the stock that I'm going to use for that is Hecla Mining Company. OK. And we have to look at this for the example on the daily chart to see what I was talking about. All right. So right now, Hecla Mining is at about $6, $5.94. OK, that's its current price. All right. But as you can see here, it is sitting at the most expensive it's been. OK, so this wouldn't be a good investment to get in because you have no room. You don't have much room for it to go up. OK, considering that it was once as low as here in that area. That is what about? It's $1.72 roughly about. So this is what I mean when you can have a high price that is also cheap. OK, so the two don't necessarily go hand in hand because relatively $6 is cheap to people. You know, you can get a decent amount of shares with $6. However, it wouldn't be wise to get because you're likely to lose that considering where it's sitting at right now. It has a high probability of coming back down somewhere around here before returning back up. You know, and there's other things that you would be able to see and use to understand that with certain analysis. But as the current position that it's saying right now, this is a cheap price, but it is also high. So it is not a good entry. It is not a good investment to go into. You want to get familiar with understanding how to read these markets. OK, and it can easily get you caught up because, like I said, on the daily time frame, you see we're already at the high. But if we were to go down, let's say to a 15-minute time frame, at a 15-minute time frame, let me clear all this stuff off. At a 15-minute time frame, we see here that we have a high here and then we have a low here. So someone would think that this is a good idea to go in because they can make a decent amount of money within the spread. However, you want to keep in mind that overall, in the grand scheme of it all, where the big money is, where the real money is, the people who move the market, where they're sitting at, it is not good to do that. They need the price to come down a little bit more. So if you were to try to invest in this on the 15-minute time frame, with the hopes that it's going to go up, chances are it's going to go down, and it's going to go down swiftly. Because although this is a high and this is much lower, you are still sitting at overall a high price, despite the fact that it's actually a cheap stock. OK. All right. So that is an example of a cheap stock with a high price. All right. So now we're going to switch gears a little bit. Now we're going to go to expensive stocks and we're going to use low prices. OK. By now, you're pretty much getting the gist of what's going on and you're pretty much familiarizing yourself with how this works. All right. But I'm going to keep giving examples because I want to really drive it home so you can understand exactly what's going on when you see it in the market. For this one, I'm going to use the famous Nike on the 15-minute time frame. All right. So Nike, currently right now, Nike is expensive, right? It is $108. My drawing tool. Nike is $108. All right. But the highest it's been is 109. Okay. So with this pullback, and pullback is something that, pretty much just comes back to a more solid position. This is what you want to look for before you get into an entry. Okay. So with this pullback, it comes back down to this area here. This would be something that you can enter because it's lower than the high. And this is one of those cases where it is an expensive stock, but it still has a low price. Now, again, this is not financial advice to say go invest in Nike. Reason why is because Nike is still high on a higher time frame, and that's where the larger money is. Okay. I use that solely for an example so you can see when it has to come back. So as you go up, you still see that it's sitting at the top of the chart. That is not wise to go up and try to go up against, because you're not going to beat it. The winners of this game are those with the most money. Okay. So on a 15-minute time frame, it looks like, okay, already Nike is expensive. So a lot of people won't think, okay, I don't need to get in there. I need to start low. However, Nike is at a low price. So it does have room to move up this much. Okay. It's about $1 and some change. All right. But keep in mind that is only on the 15-minute time frame. All right. No other time frame will you be able to see that. Well, you can see it on the 5-minute time frame because, of course, it's lower. But anything higher than that, you would want to stay away from, simply because the higher money is going to kick in at some point and they're going to take it back down. All right. So that's an example of an expensive stock with a low price. Okay. The price has come lower than what the high is. All right. And now we're going to put the icing on the cake, and we're going to do an expensive stock with the high price. For that, we are going to use Twitter. We're going to use Twitter on the 1-hour time frame. All right. So right now, Twitter is valued at $38.94, 95 cents. All right. The current price is $38.95. Okay. The high price, not too far from there, is right here. It is at $39.54. Okay. Entering here is very, very, very dangerous, considering that you have a low here, you have a low area here, you also have lows way back here. This is a situation in which the price is expensive. Sorry about that. This is a case in which the price is expensive and it's high. Okay. This is not a good one to get into, because what's going to happen is it's liable to come back down a lot more. Okay. But we can double check and we can validate. Let's look on a higher time frame. Okay. See, right now you're sitting at this area. This is the area that has been approaching. Okay. So if you're looking at it and you're anticipating, should I get in? No, I don't recommend getting in anything without doing a proper research anyway. I'm speaking just for the conversation's sake. This is an expensive and a high stock right now. Chances are the probability of it continuing up are slim, and chances are it's going to come back down. Why? Because we're sitting on the daily, and larger money, the last time it hit around this price, they took it way down here. Okay. So you always want to keep that in mind whenever you're analyzing your charts, whenever you're going over your data, whenever you're considering investing or getting into a stock. The thing is, are you right, or are you trying to be right now? That is the biggest battle that you want to overcome. Being right is far more important than right now. Okay. So that comes with understanding that you always want to get the best price. All right. With stocks, you want to get the lowest price. With Forex, it can vary because you can do sales and you can do buys. But with stocks, you can only buy. So you want to get the best price. So it has to be the lowest. All right. But it doesn't necessarily mean that it's going to be the cheapest. All right. So keep those 2 points in mind. All right. So this was it was going to be pretty quick anyway. I really just wanted it to be seen thoroughly so we can fully understand the difference between a cheap stock versus a low stock, and an expensive stock versus a high stock. Okay. And the different possibilities in between. Okay. You can have an expensive stock and still have a low price that is very profitable for you. Okay. And at the same time, you can have a cheap stock that is very high and will be very damaging for you if you try to get into it. Okay. So those things are just little brief overviews of what goes into this stock market. So keep that in mind whenever you're looking at anything. And keep in mind also, if you get if you hear about an opportunity, it's too late. You have to wait till that opportunity comes back again and it's better. Okay. And this was one of those situations in which it was an opportunity was heard about. Hey, what do you think about this stock? Because it's cheap and I'm just finding out about it. Okay. And it's too late. The movement already happened. The big people that already said, okay, we're investing in this, they've already decided to do it. And then the news was released to the public. Okay. So you have to wait until the public's frenzy dies down. And then it comes back down to a better price. And then you're able to get into it and ride that wave back up. Okay. So always remember that the goal when you are investing is to be right, not necessarily right now. Okay. Always remember that rule. Be right, not necessarily right now. And in addition to that, always remember by the time you hear about an opportunity, it is too late. It's already passed. But you can be prepared for the next opportunity that's going to come when the prices come back down, when people stop talking about it, when it starts to die down and people start pulling their money out of it and the profits start to drop. That's when you see the stock go down, and that's when it's time for you to get in, when you have a lower price relative to the highest price there. So just because a stock is cheap doesn't mean anything, and this particular stock, as it was presented to me when I went to do my research on it, I seen that it had been up in the last 3 months, it had gone up 300%, 319% or something like that. And a bulk of that was within the time frame in which she recommended. She asked me for what I thought about it. So that was that was a cheap price, but it was high at the same time. No go, because it's not going to continue to go in a trajectory that is always up. It has to come back, normalize, and then continue up if it's going to continue. Okay. So if you would like to learn how to speed that process up, how to better understand the markets, because this was just a quick overview, didn't want to take up too much more of your time, but I wanted to explain that. You can join the Mastering the Market course. You can visit my website at iamjustseen.com to join the Mastering the Market course. And as of right now, I do still have my 70% off for the course, and it is for discount code quarantine. I do have two options. You can pay in full, or we do have the monthly option where you can break that down into 3 months, so you don't have to pay it all at one time. But within the course, I go over the full way to read the market on any time frame, no matter where you are, and how to fully gauge a pullback, how to get the right entries and how to get the right exits, and how to hold it for as long as you need to. And this works for both the stock market and it works for the Forex markets, options, futures as well. Anything that you've seen with the chart that has the data like that with the candlesticks, you'll be able to read it and thoroughly understand. So if you would like to go ahead and enroll, if you would like to join, visit iamjustseen.com and click the Mastering the Market icon and go directly to the course, and you're able to sign in. Like I said, if you use the discount code quarantine that's listed right there, if you use that discount code, and you'll get 70% off. And this discount code is gonna keep running until this coronavirus situation is handled. Sometimes you wonder what you can do to help people as best as you can, because this situation is really affecting a lot of people that are home. But this is the one way in which money is going to continue to move regardless of what's going on. So for some people who are, in between and everything, like, this is something that you can take up and learn on how to move and maneuver correctly. You don't want to just hop into the markets. Okay. You never want to just hop into the market just because people say, oh, it's time to start investing. The winners of the investing game are those who those who have mastered the market and those who understand what's going on. More than that, you have to understand the large money. Okay. The large money. Those are the people that move the market. Okay. So I just wanted to do a quick webinar on the difference between right versus right now, and how to thoroughly understand a good price, how to see a good price and a bad price, and how to see what is expensive, what is cheap, what is low, what is high, because they're very different. And as I said, within the course, I break down all of this in detail, start from the candle, the actual breakdown of the candle, and I take it all the way to the end, to entries and exits and everything in between, time frames, everything that goes into understanding the charts and understanding the markets. And one more time, like I said, discount code 70% off with the discount code Courtine. So with that being said, I'm going to end it here. You can always email me, DM me. You can contact me however you want to contact me if you have other questions. But being that this is a pre-recorded webinar, that is going to be the end here. You can just email me back once you open from the email that you have received. Okay, so I will see you all in the next webinar in 2 weeks. Peace, love, knowledge, and freedom. Go tackle the markets and make sure you master them. And always remember, get the low price, not necessarily the cheap price. The low price is going to be the best price. Peace, love, knowledge, and freedom. See you later.